Did you know that Jim Cramer just revealed a massive update on Tesla stock? Tesla yet again proves to be newsworthy, although it isn't always for good reasons. Stay tuned and keep watching to see what Jim Cramer has to say about Tesla stock. Tesla has become more and more of a household name today. It succeeded enough for most people across countries to recognize the brand Tesla. For that reason, it has been a subject of admiration and criticism from experts and analysts alike. In today's video, you will find out about the massive update on Tesla stock Jim Cramer just revealed. First, who is Jim Cramer and what does it matter what he says? James Joseph Cramer, most known as Jim Cramer, is an American television personality and author. He is the host of Mad Money on CNBC and an anchor on Squawk on the Street. Cramer was a hedge fund manager, founder, and senior partner of Cramer Berkowitz. In 1987, Jim Cramer took his own knowledge of the stock market and started his own hedge fund company, Cramer & Co. Cramer ran his fund from 1987 to 2000 and had only 1 year of negative returns. He eventually retired from his hedge fund in 2001, posting an overall annual average return of 24% from 1987 to 2001 and yielding an average of over $10 million per year over the entire 14-year period. While still at his hedge fund in 1996, Cramer co-founded TheStreet.com, a website that provides commentary and advice on the stock market. Cramer is the second largest shareholder of the company, and at one point the company reached a market cap of $1.7 billion. As of August 2019, however, Maven acquired The Street. In 2005, Jim Cramer signed on to be the host of the CNBC show Mad Money, for which he is most well known. The show's goal is to teach its viewers how to think like professional investors and not to tell people what to think. The show's popularity has risen consistently over the past 10 years, making it one of the most popular investment shows on CNBC. All my career, I have been fascinated by companies with vociferous bulls and ferocious bears, if only because they can be so entertaining, Cramer once said. In 2019, Tesla had a new convert as tough critic Jim Cramer of CNBC's Mad Money turns from an agnostic skeptic to an outright bull on the electric car maker's stock. The Mad Money host declared that he became a true believer in Tesla, which he classifies as a battleground stock. Tesla is a huge buy right here, said Cramer in 2021. However, by 2022, Jim Cramer announced that he prefers Ford over Tesla stocks, even though he used to be quite optimistic about Tesla. Tesla is considered as one of the top picks in the EV market today. The EV company's shareholder returns were 9.7% in the past year alone. In a March interview, though, Cramer shared that he chooses Ford over Tesla stock. According to him, Ford is preparing to oust Tesla from its place and become the leader in the EV market instead. Ford is supposedly planning to produce around 2 million electric vehicles by 2026. According to Cramer, Ford CEO James Farley does not make anything that does not make money. This rings true as the company's stock price increased when Farley took over in 2020. Farley, like Musk, is planning to move the company away from combustion engines toward electric vehicles instead, just like Tesla did. It can be noted that Jim Cramer criticized Tesla's Cybertruck, which is yet to be released. He said that this will be Tesla CEO Elon Musk's first flop. This is yet to be proven, of course, but the number of pre-sales and reservations for the Cybertruck proves otherwise. Aside from criticisms against Tesla, Cramer also recommended buying a Ford EV instead. While it may be true that Tesla will soon face heavy competition since a lot of big corporations are beginning to transition into electric vehicles, Morgan Stanley's Adam Jonas said that the current landscape for EVs is a race, and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21 while other companies are still at mile 2, while others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. That said, Tesla and Ford are completely in different markets. While Ford may be trying to catch up with Tesla, Ford is still an entire generation behind Tesla in terms of AI developments. So why did Jim Cramer choose Ford over Tesla? Some assume that one of the reasons is overall macroeconomic volatility, with many experts predicting a worldwide recession. However, Cramer has a positive outlook on the market and believes that stocks are certainly poised to surge if some things go in the right direction. Cramer said that multiple economic aspects can influence investors' opinions of the stock market and their decisions about buying and selling positions in a recent interview. While it may seem like Cramer simply set his sight on an EV company that is not Tesla, it proves to be otherwise, as he has not expressed backing on any other electric vehicle company. In fact, he said that he does not think that Rivian is the next Tesla. Rivian Automotive Inc. is an American electric vehicle automaker and automotive technology company. This statement mirrors that of Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Wood said that Tesla is on the battery front about 3 to 4 years ahead of Lucid and Rivian. She added that Tesla is ahead of almost anyone else because Tesla became very creative in the battery space, especially when they introduced silicon into anodes and experimented with ultracapacitors. For these reasons, Wood believes that Tesla is ahead of the game by 3 to 4 years. Do you think Tesla will be able to maintain its leadership position in the EV market? Share your thoughts in the comment section below. Jim Cramer recently shared how to find the next high-growth stock before it takes off. He said that it's always possible to find stocks with high growth potential if you know how. Sometimes it can be as simple as liking a company and its products, then following up with the research into whether the stock feels worth investing in, Cramer said. In fact, that was the case for Cramer's daughter when she decided to invest in electric car maker Tesla. In 2019, she was driving from Oregon to LA and decided to rent a Tesla. She wasn't into cars before, Cramer says, but she was amazed by how much she liked driving an electric vehicle and how easy it was to refuel. She said it was the most fun car in the world, says Cramer. His daughter was sold on Tesla, but Cramer himself was skeptical about the company and pointed out that the stock was expensive. Still, Cramer's daughter said she believed in Tesla's CEO Elon Musk. She also said that Cramer held a bias against the company because he was too old to see the potential in electric cars. "I'm going to save up to own a Tesla and I want to buy the stock of Tesla," Cramer recalls her saying. Sure enough, she bought in and saw Tesla's stock increase 10 times, says Cramer. She had conviction, she did the work and bought it, he says. When investing in a company's stock, the takeaway here is, do you like it? If the answer is yes, then you should do the work to decide if it's a worthwhile investment, starting with checking out the company's filings with the Securities and Exchange Commission. These reports provide information about key metrics like revenue, net income, debt-to-equity ratio, and cash flow. You'll also want to learn as much as you can about the company and its competitors. You can do this by reading news stories, looking through the company's website, and listening to the company's earnings calls if they are available. Whichever company you choose to research, picking one you like can be a great way to identify a stock that has growth potential. That's why it's important to understand your preferences as a consumer, says Cramer. Cramer notes that if a company creates an innovative product that you like, they're more likely to keep making good products even as consumer demand shifts. It is important to note how vital it is to conduct a thorough study of any certain stock you are eyeing. Even seasoned investors exert time and resources to analyze and study available data before making a sound decision. Make sure to visit Tesla stock and watch our other videos.